I'll just address my comments to the first part of what you said about printing money, and you're absolutely right. And in fact, you're right, sir, that the Treasury is the one that actually makes the payments. But what happens in practice is when the Treasury goes out on a weekly basis and sells securities, those securities are bought by primary dealers like Goldman Sachs or J.P. Morgan, and in turn the Federal Reserve creates new money to buy those securities. So you do have the Federal Reserve facilitating the payment of our debt and propping up our entitlements. And I think one of the extraordinary things about the political debate in recent months is that people are talking about monetary policy. They're talking about the dangers of having, a central bank dictating our economy. And that's what's been happening. So, again, I say the fact that just look in the last 3 years, just the last 3 years, the monetary base has tripled. And we just heard a couple weeks ago that Ben Bernanke wants to have quantitative easing, not 3, but quantitative easing infinity. He's going to go ahead and print $40 billion a month until things get better. Okay, I'm not really sure what sort of a plan that is, but I do know that it's cheapening my savings. I do know that it's going to prime me the pump for inflation. I do know that it allows him to pick and choose who he wants to buy mortgage-backed securities from, so certain people benefit. And it has been an extraordinary thing to see people now talking about monetary policy and the curtain being pulled aside based on what the Federal Reserve is doing and uncovering the damage it's doing to our economy. So you're absolutely right in that regard, and I'm glad that we're talking about it.